Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it's the Friday recap, the last day of the week, and these weeks just feel really long. There's just so much going on, from the long side, from the short side, from the action, from news around the world, things to look at. So every week we come in here on Monday and we try and get organized. And we try and set up our game plan so we have our A, B, C list. What's looking for, like what we're looking at for some short-term momentum. What levels can we see in the market? What are some of the buzzwords out there? What's some of the things that the markets are obsessing about? And then how do we deal with it as we move forward through the week? So as far as the week's concerned, there was a lot of really good action. We had action in the casinos where you had really nice trades. You had some action in the banks, select breakouts, select 52-week highs, and a lot of strategies that we've been talking about in T3 Live on the virtual trade floor, as well as in the Twitter sphere and with all our affiliates. As we approach today, I managed a lot of my positions and sent out a few notes saying that I see some mixed signals going into the weekend. I see some pluses and some positives, but I also see some negatives that you can't just discount and kick to the curb. And sometimes, as a momentum swing trader or a professional trader, there are times to be a little less involved, to have some excess risk off the table, and then maybe look to see if there's some type of complexion change. It doesn't mean that you have to switch gears and you get out of everything and you load up short, especially if you're a little bit of a longer term investor. But if you're a professional trader and you're trading all day long and you have the ability to get in and out and switch gears real quick, there are times when you have to almost be in neutral, ready to figure out which gear to get into. And right now, I'm in that little neutral gear right now, and I'm not exactly sure. I do have some longs that I still like, and I do think that a lot of the stocks that I actually sold in the last few days can go higher at another time. But as a professional momentum short-term trader, I could get back into them, and I can continue to figure it out. So first things first, I'm going to show you the chart of the S&P and show you what's positive here. So if you go to the chart of the S&P, you will see, on the longer term basis, here's that October 4th low, that outside day, and here's this macro trend. Here's a higher low, it doesn't even touch this one, and it just continues all the way up. And market hasn't even thought about breaking and testing this yet, so to speak. Then you have the accelerated trend that started when we broke this descending trend line that we've been riding for almost, December, January, February, almost 3 months, which is a lot of sessions, over 45 sessions. And during this rally, I want to take a closer look so you could see, there's been a stair-step type movement, a type of movement that if you analyzed the entire way, you were able to stay with, okay? And every time that we've made a new high, we consolidate and hit a new floor, make a new high, consolidate, build a new floor, hit a new high, consolidate, build a new floor, and look what we're doing this entire time. We're riding the 10-day. Except for this one time when, after a nice move, people weren't sure exactly what was going to take place. So the market flirted with the 10-day moving average where we closed below it, or where we went below it, closed above it, and this was after that outside day. And we just spent more time here. We didn't close decisively, we didn't break the uptrend, we didn't change the trend, and then we continued. And then again, look what happened when we went to a new level. Okay, this was the high, we broke above it right here, and the market needed time to build a new floor. What does it do when it builds a new floor? Stocks reset up, patterns start to get tight again, and we get situations to trade from. And then look what happened when we went above this level. Okay, you then did some work and you built a new floor. And look how we're building a floor, always with the 10-day moving average. So on Wednesday, we had a distribution day, okay, and it was met with buying, with some strength in the banks and some strength across the board. And then today, a little bit of an off day as we're hugging the 10-day again. So the question is, do we need as much time as we put in right here? Do we need as much time as we put in right here? Earlier in the rally, when things were more compact, we held for 4 days or 5 days, not 2 weeks. So we could see some more sideways action as we move forward, or maybe we close below this little line here, and the market comes in to test 1353, which is a 20-day, which is no big deal, or perhaps a little bit lower. But we don't know that yet. But when you see a little, this, I wouldn't say today was distribution day, but you see a little choppy action, and you see stocks extended from buy points, and you see some other negatives, you put a little less on. Now, there are a lot of guys out there that I respect that are all calling for a 3 to 5% correction, or 2 to 5% correction, or maybe even more, and they've been calling for that, I think, since the first, second, third week of January. Okay, so one of these days they might be right, and they think it's cool to do that, but it's not profitable. At this point, who knows? Maybe they're a little closer to being right. I'm at this point, I'm neutral. I'm not leaning short. I'm trying to stay with some things, but I trimmed a lot. I trimmed a lot of positions, and I'll start going over. First, there are two negatives to this side of the puzzle. Like, I know we're above the 10-day with the S&Ps, we're above the 10-day with the Dow, but if you look at just say the Russell, which is considered the risk on end or ETF, that's starting to lag and starting to roll a little bit. I showed you this, I think, on Wednesday, and then if you look today, some guys actually made money short it. I wasn't shorting it, I was just kind of watching it, and if you look here on the Russell, you will see that first of all, it had a really nice breakout also back here. It's following, if you want to do this trend, it's, what is it, kind of like, I would say almost broke this right around here. But really, I don't put too much emphasis on that. I was watching this overall macro pattern where we broke below this recent floor. We broke below, and it actually let it go below, and we've been kind of churning right here. And we're now below, okay, the 20-day moving average and the 10-day moving average. So that's not a positive in technical analysis land. Plus they're rolling down and churning, okay, or actually curling, I'm sorry. So this is a small sign that this might be leading us a bit lower. So you have to put that in the back of your head. That's why I cleaned up some of the excess little guys and some other stuff. It doesn't mean the rally's over. It doesn't mean, batten down the hatches. We're doing what Prechter said and getting to, going to new lows in 4 years. It just means that if you're a momentum trader and you want to take some risk off, you could do so. So if I show you on a more longer term basis, I guess you go here and go to the October low, and we're still on this more gradual trend. You still have room, in a few different spots. I don't know why the 50-day is not in here. Somebody took it out, I guess, when they were trying to do a mid-afternoon lesson. So I'll put the 50-day in here. So there you go. There's the 50-day. Strong indices are allowed to come in and hit their 50-day and still be good on a macro level. After a move from the October lows and then the November lows and the size of the move we've had, this just means momentum is leaving, and short-term traders might not want to sit, but longer-term traders are fine, or macro investors. So this would be a spot to look at where I think would be, very prudent or constructive to hold. So the Russell action gets me a little concerned, just a little. Okay, and then the semis. Okay, the semis, Intel, the chips that go into all the devices, the nuts and bolts of tech, which is usually like the heartbeat, they're starting to roll over a little bit also. So I'm trying to read into what that could be. It's a little bit of a rounding top. And if you look here at the SMHs, you will see what I'm talking about. Here is this little, this is where we broke out the last time. Okay, right around here, and this, I would say, is a little bit of a upper uptrend here, or accelerated uptrend, which we bounced off of a few times, and it's now also below the 10-day and now the 20-day, and it's looking a little bit like a little toppy here, a little choppy, no momentum. Look, 3 down days in a row. So if this level were to break here too, you could see a retest going this way to potentially, the 50-day or right around here, and still be really fine on a macro basis, especially if you go back and look where we came from, all the way back in, look at that, all the way that reversal in October. So you want to draw this trend, and this too is very well intact. And again, you could see this area, hold, but on a short-term level, there are guys that can make money if we break this short, and there are guys that will take profits because they don't have to sit tight because they have other jobs and they need to trade for a living and work. There's money here to the short side if that were to take place, and that's what some guys are talking about. But if you're a macro investor and you bought here, or you bought at this gradual uptrend, you don't need to really sell. I wouldn't be in tier 2 or tier 3. I'd be only in tier 1 now, but you would have the ability then to buy back there. So we'll see what happens with the SMHs. Another reason that there might be some pressure is that Wednesday break in gold. It was harsh, it was fast, it created some fear. It definitely shook people up that in one day you could take back almost 2 months. And if you look here on GLD, you will see what I'm talking about. Again, this potent down move, okay? This was huge. This engulfed the entire, what is this, almost 2 months here? Okay, so it took it out of the way. So that just put some fear out there that, oh my goodness, everything was acting so well and so steady, and then pow. Maybe that could happen in other areas of the market. And now I drew this line saying if the sellers control gold moving forward, probably doesn't take back a third of this move, goes sideways, creates another pivot, and then maybe rolls down from there. And right now it's holding the 50-day moving average. So in actuality, it's okay. It's basically retested this breakout. Actually, no, not even yet. This was somewhere around here. Kind of retest right there. So let's see what happens here with the GLD. We'll get some more data and we'll be able to figure that out. And then you see stocks that have had big runs. Okay, this week we had a really good strategy with the casinos. LVS was looking like it was going to break above 54 for momentum. Win had the descending channels right there, and both of them worked really well, and it was a good 2, 3, 4 day trade. And then today, midday, I tweeted out that I'm done with LVS now, and I'm out of my Win. And some guys called me back like, well, you said higher prices. You said the measured move of LVS is 65 to 68. Okay, but that could be in 2 quarters from now. As a momentum trader that bought around 54 and you had a 3, 4 day powerful move, and then you see a little bit of a topping tail or a red dog reversal today short term, we could sell it. If you're a macro investor and you're probably never going to buy it back, you could just sit through it. That's why you have to know your time frame. So if you look here at LVS, when it was up 40 cents, I said I was done with it. And now here is the different time frames. This is when it broke the downtrend. This could have been a nice tier 1 position. When it broke above this on earnings and earnings was out of the way, here's your tier 2 as a macro trader or macro investor. And then here, if you were flatted, I was actually flat during this time period, and I got in right here as it broke higher. So if this was your tier 3 cash flow, here's where you take a tier off into this extension. And then especially now that you see the final bar here, what do we know what this is? This is your red dog reversal outside day. This is when it broke above the highs, squeezed short, some guys chased it, and then all of a sudden like, uh-oh, we just closed below the high. Maybe that means we need a little bit of a correction here. So for me, I'm out of it. And as it comes back in, I'll measure the action, I'll try and get back there. If you're a macro investor and you bought here and you added here, that's a good spot to sell some, and then we'll see how we handle this accelerated uptrend moving forward, and maybe who knows, it comes down and retests this area. But at this point, short-term topping tail. If you're a momentum trader, you leave. Some guys probably even went out short this. Oh my goodness, they went out shorted. Yes, probably, because you know what these outside days sometimes lead to. We've seen it in a lot of other things. And then if you look at Win, the strategy was for it to break above 117 was a buy area, then 120 to 122. Short-term move was 125, longer term was 130 to 133, and I think that's the way Kramer put it out there also. So today, Win went into the strategic area, and that's why you have it there. So here is the macro pattern that we talked about. This was that outside day reversal, time to get out of some stock, which you actually saw a little bit of one in LVS, and then here was your retest, and then it's been in the downtrend since. So what I thought was interesting here was when they came out with the shareholder lawsuit. You saw this gap up, and then it just just like dripped lower. So this was buy area 1. Once it poked its head up on this day around 118, this was buy area 2, and then this was an area of resistance, and then 130 to 135 was the next. It went as high as where'd it go today? Let's see if it was the high here was 132.59. Not so bad. I think Kramer said 133. So anyway, I sold the last of my Win above 130. I didn't hold all my tiers. I think I was in tier 1, tier 2, got down to tier 1 yesterday, and then I sold the rest of it today. And again, guy said, why are you selling Win today? I'm like, you know what? We just had a 3-day move. We just met my targets. It happened a lot quicker than I thought. I thought it could take weeks, not 3 days. But you know what? That's what do they call that? Luck? I don't think it's luck. I think it's when opportunity meets preparation. Obviously, you saw the charts. You saw the work beforehand. So the preparation was there. And you know what? We got some news, and it happened quicker. Sometimes it happens. If you're in the right trade at the right time, you could get paid. If you're not in the right trade, you don't have the right strategy, you're going to chase it and miss it. And I think a lot of guys were just buying it today. I'm like, this is your first buy today? I'm like, were we sleeping? Anyway, I'm out of Win and LVS. I was in both of them from Monday till today, and that's a nice swing trade, momentum trade. Now let them build a new pattern, then we go back there. So with that said, that's not a negative in the market, but when a lot of these stocks are all well past buy points or pivot points, that shows you need some correction, or you need a pause and either sit through it, or you don't sit through it and you wait if you're active enough to re-enter it. So, that's the story with those, the casino stocks. And then just say like the banks. All right, JP Morgan bought like a week ago. I've been actually trading it, and I've been long probably 75% of the time since December 20th. To me, JP Morgan is probably worth a little bit of a sell, just using your tier system. I'll put this over here. You look at the pattern here, and there's lots of different ways to handle this. This was the low. Here was your higher low. This is when it broke above this mini wedge. This was, I think, December 2nd. This is when I initiated JP Morgan. And, then you had to move to the old resistance, right? And then it came in, and a nice potent day, and then we were going sideways. I think I was out of it right around here. On this day, I re-entered because it held the 20-day. And then this day is when I added, because this was the day that Warren Buffett said he was putting in his PA. And then I think I sold the majority right around here, and I'm still trailing some small, but after a move from this area all the way up to almost 40.63, you're allowed to take some off. So if you were a macro investor and you bought here, and then perhaps bought a little bit more on the breakout, you get back to a tier 1 and then you sit. Because who knows, maybe it comes back and retests one of these moving averages. It is a bank, and I know it's been frisky, but sometimes, or usually, they come back, retest, and then continue. So I could wait for that before I add, and if you look at the trend from here, that goes right there. Okay, so why not little retracement and figure that out. As far as Goldman, it's been a little different. Goldman finally triggered above that 118 area. And it was a nice trade yesterday. Today, I was trying to buy the dip back, which I did, around 120, but I was able to sell some too. Went above yesterday's high of 121 to 122 and change. I tweeted out saying I'm trimming some Goldman. I think it was above 122, around there. I think I sold some around 121.50. So nice trade. Buying 118, okay, intraday, adding through 120, maybe taking home tier 1. And then today, it goes through, get a little lighter, and now I could wait and rebuy it back. So if Goldman Sachs is any good, it should hold that 118.50, 119.50. Maybe they pinned 120. And we'll see. That'll give us clues also on what the story here with the market and the banks are. So if you look here at the chart of Goldman Sachs, you will see not the biggest deal. Here is when it triggered on earnings. This is when you could have gotten to your core trade or started trading it from a net long. Quick move to resistance. Okay, why not correct a little bit after the size of the move we just had? Here's your sloppy consolidation, which got me a few times. And then finally, nice breakout yesterday, good cash flow. Little small day today, no big deal. Goldman Sachs was, I think, down $1, okay, after being up almost 5 yesterday. So I think that this should be buyable. Okay, if this stock is strong, if the banks remain bid for, it really should not break below 118. So I didn't aggressively buy back today, but I'm still in some long, but a lot less than I had when we broke out here, because that was my cash flow trade. And then I'll figure out if I could buy more into this, and if it holds, then we can continue, and then obviously the pullback in the market won't be so severe. So we'll see. That's how we judge things. As far as the OAHs, great 3-pronged strategy starting back from December. The inverted head and shoulders pattern that had 3 different triggers. And now if you're a momentum trader, some guys emailed me today, like, I'm getting out of the OAHs, it's been a nice ride, I want to wait and see what happens. Okay, if that's what you do, if you're midterm or longer or a momentum trade in short term, it's been a nice ride, you don't have to be long them right now. You look here at the OAHs, especially since oil feels like it's coming in a little bit, and if you don't want to, actually I don't see any reason why to sell it yet, but here was that pattern that we talked about. Here is the inverted head and shoulders pattern, the left shoulder, the head, right? Here is actually a descending channel with the right shoulder, okay? And then here is the neckline, which we kind of broke above and we're still holding. I don't see people getting all scared on me. Anyway, this was your accumulate, right in here, your anticipation. This is your add when it broke this downtrend when it started working. And then here was for momentum. Okay, I gave you a little bit, and now I would say if you're not committed to this trade, and you think we're going to correct, and you don't want to be involved, it breaks below this area, you get out of the way, you can get the cash. Some people might even short it, and then look to see how it handles the 50-day. And if you're an investor and you're in tier 2 after this and you want to get back to tier 1 right around here, fine. And then we'll see if we could buy the dip for what could be, and I think will be, a bigger move this year. The just question is, does it hold here and go, or does it break, come to the 50-day moving average, and then go? And if you look here from the October low and you cross right here on the more gradual macro uptrend, oh, look at that. It comes right into about the 50-day. So the accelerated one could break, and if all you do is follow accelerated uptrends because you're short-term momentum, kind of like me, then you get out here and you wait to see if this macro uptrend holds, which I think it does, and I think the market does. So with all that said, you have to know your time frame. You have to know what you're good at. You have to know what type of trader you are. Are you a momentum trader? Are you a scalper? Do you take overnights? Do you hold longer? Do you look for sector rotation? Do you look for moves? Do you look for 52-week highs? Or do you do 3-4 trades in a quarter, just the best stocks, and you hold? Or, what moving averages do you follow? There's so many different things, but if you don't know what it is that you do well, you're never going to do anything great. And if you want to work on some things, like for me, I wanted to work on holding things longer. I wanted to learn, work on holding multiple positions, and then also adding cash flow. And that's what I've been working on since that December 20th gap and go. So I was sick of putting all these great long-term projections and not maximizing them as much as I should. The same way, or if I do a stock that's too early, like I did Goldman a few times, earlier in the week, and I didn't make money, but then I still was able to go back to it yesterday, realizing it just wasn't the time. Almost like this. Look at IBM. Showed some strength today. I know it's been choppy. Remember it took a few times in here where we were buying and it didn't work, and then finally we had a nice trade. And now look at it. It's hovering above this breakout. It closed in the highs of the day. I know I'm a little negative or I'm short-term confused on what the direction of the market is, but I took out a tier 1. And if it trades through 199.29 on Monday, I'll be adding to it for cash flow, and then I'll see whether or not it trades through and creates a tail or trades through and breaks out, because you did see a successful breakout, and we still have some, like here with Lulu. Okay, maybe we get that as well. So anyway, IBM still looks okay, holding up real well. I sent out a note today to take some profits in Microsoft. I think Microsoft is definitely tired. If you were in there from the breaking of this downtrend, or when I was on Bloomberg saying it can go to 32 to 35, well, it met the target, and now a little choppy. I would say the trend is still up. It hasn't broken anything. It can continue, but I do think that it is Microsoft, and I guess it's actually above the 10-day. If you're in more than a tier 2 or 3, get down to a tier 1, and then there'll be another time to buy it. And I know for me, I would love to be able to buy it right around here. Obviously, that's a long way away. Probably doesn't get there. I guess we'll have 10-day support 1, support 2. But again, it's still in this trend, and there have been trends that never break. Same thing with the spiders. I showed you the chart of the spiders. The trend hasn't broken yet, so there's no reason to really anticipate it. But there are some times when you could back off a little bit without pressuring your positions or pressuring or just using your own opinions with that it's going to happen. It hasn't happened yet. Anyone that's been anticipating it breaking hasn't been rewarded during this entire time, because it looked like it was a few times, right? It looked like it would have done it right here. It didn't. Okay, it looked like on this day it was going to do it. It didn't. It looked like it a few times. So right now, it's still in this accelerated uptrend. It looks like it's at a spot where the market needs to prove itself again. So if we go sideways like we did here for a number of days, you'll see setups happen and you'll be able to put on more positions again. If you go sideways like we did here and not pull in and not break the trend, you could do it. So we'll see what happens here. But at this particular point, market has a lot to prove. So there's some times when you could be a little bit more neutral, a little bit more hedged, or a little less involved. So either way, know your time frame. You'll figure it out. We had a lot of great action this week. If you had a good week, congratulations. You did some of your homework. You stay tuned. We did a lot of good, a lot of action here in the stocks that we play. Even like the Zenga. Even like there's just a lot of them. You can pick your. That's another thing I want to show you. Zenga. This one just shows you time and place, right? This was when it broke above the IPO high. Way back when. You had a 2-day move, consolidated. You remember earnings weren't great, but it held. Actually look at this, right? It held the prior high from the IPO, so look what it tested. Pretty symmetrical. And then this is when it started to just nudge up. So I started getting involved here. yesterday the volume came in, it looked good, I bought a decent amount, took it home and gapped up, and now you sell some. And now if it could prove, I took a little home but not as much as I had yesterday, if it could prove to hold just say this breakout area and go sideways, then there'll be a new range, a new type of strategy, and we'll figure it out. But until then, now's the time to sell some, stay with it, watch the action, and then figure it out from there. So I just probably went over more than you wanted to hear late on a Friday afternoon after a long week. At this time, go spend some time with your friends, your family, do what makes you happy. Again, you're not defined by your P&L, you're not defined on whether you had a good or bad week. What you are defined is how you deal with it and how you learn from it. Scott Redler, T3 Live, the recap. See you Monday morning. Have a great weekend.